Hello, this is Matt on the Moon Lambo channel. Ripple executive Ashish Birla is the subject of a piece on AMB Crypto today. And the piece it touches on a number of topics, some having to do with crypto scams, a little ICO action there. Some has to do with Ashish commenting on the tokenization of, well, all sorts of stuff, including real estate, and then securities law as well. So I'm going to dig into this piece and share with you some of my thoughts on it, as well as expand on the current state of ICOs today. They're not doing so hot. Then the last piece I'm going to cover, it's titled Swiss 6 Exchange lists Bitcoin and Ether exchange traded products. So unrelated to the primary thrust of this particular video, which is why I'm saving it for the end. But if it sounds like something that's interesting, I encourage you to stick around through the whole video. Up to you. Now, before we get rolling here, if you would please delicately tap that like button, and if you're a fan of Ripple and XRP, go ahead and subscribe to the Moon Lambo channel. This is, after all, an XRP-centric channel. So here's the title. Ripple's Ashish Birla claims securities law is a good thing for digital assets. Ripple has maintained an arm's length distance from XRP's performance in the cryptocurrency market, but it is covering ground in terms of XRP adoption. And by the way, when they say that, clearly they're talking about price, like difference about XRP's performance. Well, if you want to talk about the actual performance, just closed over 50 million ledgers. Now, how you gonna act? That's incredible. Ledger closing every 3 to 5 seconds, and I think every time I check, it's more like 3.7 seconds seems to be pretty normal for that. Blazing fast, incredibly cheap, and nobody's ever been able to successfully halt or attack the XRP ledger. So I'd say in terms of performance, doing pretty solid. But of course, this writer happens to be thinking in terms of price, clearly. But the reality is the entire crypto asset class is down in terms of price. But anyway, XRP recently received native support sometimes words are hard. Native support on Coil via BitPay, a development which would enable massive adoption of the third largest crypto, not only for people trading in crypto, but thousands of businesses as well. And indeed, I did report on that in a video yesterday, I believe. Right? Despite XRP's growing adoption rates, however, regulatory concerns are still looming over the project. Well, I think that's true of the entire asset class, but anyway. Despite such regulatory concerns, Ripple's Senior Vice President of Product, Ashish Birla, thinks positively of the securities law prevalent in the United States. In an interview, while discussing the ICO and SEC fiasco, which is too strong of a word, but anyway, Birla said, quote, "I believe that securities law is very much a good thing for digital assets. You're not going to scale this industry unless you have the proper regulation." Absolutely, and that's why I always praise Ripple for being the adult in the room that they are. Not trying to skirt the system. They don't have this weird ideological bend where they have the attitude of down with banks and down with governments. No. Rather, what they're trying to do is completely change the legacy financial system globally. I want to move money around the world, make it possible to move money, real value around the world, as easily as it is to move message across the internet today, whether it's email or even text message, whatever it is. You can move information seamlessly, easily, everything interoperates. They want to do that with money. And so it is coming. Little task, right? Just a little pet project. The ICO craze took over the market in 2017, and subsequently, various projects raised money using tokens. However, 40% of these projects were run by fraudsters who ran away with the raised amount. The ones that lasted have lost almost 80% of their value, and the SEC's clampdown on the companies conducting these ICOs in the US has killed the ICO market, noted Birla. The world has moved on to the phase of tokenization, one where illiquid assets are converted into liquid, for example, tokenizing real estate. So here's a quote from Birla on that. "One use case that comes to mind is tokenizing real estate, which is typically very cumbersome to buy or raise money for. And if you can make something tokenized and liquid, you can then think about derivative products on top of that." And I've cited a number of times this concept of living every day that passes ever closer to a truly liquid world where you can get in and out of assets, whatever it may be. In this case, cited real estate very easily, because a lot of the costs associated with buying and selling of many assets, I think it's fair to say it's true of real estate. It's labor intensive, and Just think about the paperwork associated with it. But it's possible to knock a lot of that out with tokenization, with just having a cryptographically secure network that just kind of handles that. So there's not a question as to what's right, what's wrong, so on and so forth. So anyway, the piece continues. However, the senior VP appeared bullish on this concept and spoke of a smart contract factor to govern asset trading like equity. With this feature in place, the legal team would have to venture into dealing with stock transfers. Instead, it can help the product team in making way into new markets, with Berla claiming that we may see this in the future. Indeed. And so as far as the ICO portion of this, take a look at this. So there's it's just such perfect timing. There's a brand new piece out today titled "ICO's Failing Fortunes May Force Them to Take a Curtain Call." Right, looking back at 2017, when the bull run of Bitcoin and altcoins was all the rage, ICOs were legitimately recognized as a goldmine for raising millions for crypto tokens. The staggering growth of virtual assets turned multiple heads in the market, with the allure of ICOs running wild among investors. However, even after the bull run came to an end, ICO fever was still evident, despite the fact that the market appeared to be maturing. In fact, back in August 2018, a report had suggested that all signs point to a maturing ICO market here. A recent report drawn by Longcash analyzed a list of ICOs from the tracking site ICO Watch, with the results being fairly disappointing, especially for those who made their money from similar ICOs. However, Longcash made sure to mention that the tracking site in question itself went out of business recently, with data being collected only till late August. It was observed that when measured from January 2018, the number of ICO projects drastically dropped over a period of 20 months. In January 2018, over 160 projects were listed by ICO Watch. In July 2019, there were less than 5 projects. Here, it is important to note that IEOs were not considered during the period of data collection. IEOs fared better in 2019 than ICOs, for example, right? From the chart above, it can be clearly seen that the capital flow in the ICO space has also steeply reduced. From January 2018 to January 2019, 7 projects managed to raise $100 million. Since then, however, there have been none, right? Moreover, only one project collected over $50 million in 2019. It must be noted that this project was launched in late 2018, and its ICO was done by January 3rd of 2019. So, I mean, we're towards the tail end of, the frenzy around that anyway, I suppose it's probably fair to say. In 2018, the collective capital raised by ICOs was a whopping $7.6 billion in comparison to only $338 million in 2019, projecting a major drop of over 90%. It's just astonishing to me that so many people flagrantly went out there during the ICO craze, which really got going in 2017, and it just, to think about this, 40% of the projects are reported to have been scams. Like outright scams, not just bad ideas, but scams. That's crazy. And then the rest were bad ideas, like pretty much all of them, right? Because you don't need a cryptocurrency for everything. It's just ridiculous. It's the same thing as the concept of the frenzy around the dot-com boom and bust, where if you had a .com on whatever your company was, people were just throwing money at you. It's like, here, take my money. It's essentially what the attitude was like. And so if this is really dying down, and it seems to be, that's just fine. Like, from my perspective, it's just maturation of the entire asset class here. But, man, what a crazy world we live in here. And it's just interesting, too, that XRP was around from the early days. XRP was being developed even in 2012. And it was pre-ICO. It's completely fast. And so, like, Ripple raised money outside of that. I think, if I'm not mistaken, it was either it was a $50 million partnership or it was provided directly to her, but I actually have to Google that to get that right. It's one or the other, but there was a major investment from them years and years and years ago, pre-ICO, which is just kind of fascinating to me. So there are other ways to raise money, but it seems like Ripple kind of did it the old-fashioned way back then. All right, check out this tweet. This is from XRP Crypto Wolf. Thank you very much, good sir, for sending this directly to my inbox. It's a piece from the blockcrypto.com, Swiss 6 exchange lists Bitcoin and Ether exchange traded product. So we're talking about new ways of moving value around here. We're talking about maturation of the asset class and infrastructure. An exchange-traded product, ETP, with a combination of Bitcoin and Ether, ETH, is going live tomorrow on Switzerland's primary stock exchange, SIX. Fintech firm Amen AG and cryptocurrency custodian Bitcoin Suisse AG have partnered to launch the ETP, which will allow Swiss investors to add a basket of BTC and ETH to their portfolios, according to a press release shared with the block on Thursday. Currently, the basket composition of the product is 90% BTC and 10% Ethereum. The ETP goes with the ticker symbol ABBA, for trading on SIX. This physically backed ETP is fully collateralized, which means that for every Bitcoin and Ether bought for the ETP, there will be an equal corresponding crypto amount stored securely in the Bitcoin Swiss vault, said Amen AG. So conceptually, this is quite similar in terms of, as far as it goes back, those are futures contracts, but they're physically settled with Bitcoin, which is super duper. The more of this type of thing we can get, and especially if it can spread ultimately to other cryptocurrencies, like I'm thinking XRP, that will dramatically over time affect supply and demand, which is a very good thing if you're invested. Anyway, Hani Rashwan, co-founder and CEO of Amen, said that the product has been designed for the Swiss by the Swiss to answer a need for a Swiss franc CHF-denominated ETP. It represents a unique way for investors to add the two major cryptocurrencies globally to their portfolio via a regulated product listed on SIX and backed by a Swiss-based custodian. With today's launch, Amen AG now has a total of 7 cryptocurrency ETP products listed on the SIX exchange. These include an XRP-based ETP, a BTC-based ETP, a Bitcoin Cash BCH-based ETP, an ETH-based ETP, and the Amen Crypto Basket Index ETP, and Amen Bitwise Select 10 Large Cap Crypto Index ETP. That last one's a mouthful, jeez. So anyway, that was actually the first I had heard of this in this particular article. So cool stuff nonetheless. But I think, like I was saying just a moment ago, I think there's just going to be more and more of this as time passes in countries the world over. And again, if it has to be physically settled with cryptocurrency, you know what that means for supply and demand, like I said. So all good things in time. But that's it for this video. Thank you so much for watching. I do appreciate all the support. I am not a financial advisor. Do not buy or sell anything because of anything that I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Lambo!